Just on that very same subject, I don't know if you know Mr. Willem Middelkoop from
He's a
Amsterdam.
great guy.
This is something he just tweeted recently. The Silver Institute just updated their numbers, and I question whether some of them were accurate. But this was Willem's summary of the current, just looking at the raw supply demand deficits out there. Global mining production is in the low 800 million area, but total physical demand is north of 1 billion, and the recycling number clearly is not going to be able to keep up with this deficit. And these trends are just continuing as more and more solar and electric vehicles are just increasing the consumption side. Mm-hmm. And then we have the supply sides just, is either flat to slightly down. I mean, this is an accident waiting to happen, according to Willem. I mean, would you concur?
Yes, with the caveat that supply and demand in silver, I don't know if we have time to go through it.
Sure, we got time. For you, we're going to do a 3-hour video right now, Rick.
Supply and demand in silver should be the subject of a PhD thesis. In the first instance, silver supply, primary supply is mostly byproduct, which is to say, silver doesn't come from silver mines. About 20% of primary supply comes from silver mines. So to understand the supply side, you have to understand what copper demand is going to look like, what lead demand is going to look like, what zinc demand is going to look like, mm-hmm. and what gold production is going to look like, because you have to look at byproduct supply to understand supply. Very hard to do. The second has to do with scrap supply. And that's really a function of price. As the price goes up, you can afford to recycle more silver. Mm-hmm. The weird thing about supply, though, I mean, the thing that I remember ambushed me in 1996 was that a whole bunch of supply is hoarded in South Asia, the poor man's gold. Mm-hmm. And so to really understand silver supply, you have to think about the real price of silver in rupiah, and you need to think about the needs or the means of the Indian peasantry. Mm-hmm. I remember in 1996, when Buffett announced that he had accumulated something like 20% of the above ground silver supply in the world, the first Silversqueeze, if you will. And the silver price shot up because, of course, Buffett gave it, character and everything. And then the price collapsed. Mm. And of course, there were all these howls of rage about manipulation. What actually happened is that the Indian rupiah fell by 50% against the US dollar. So the silver that Indian people held was automatically twice as valuable. Mm. Then the price of silver in US dollars doubled. And then they had a poor harvest in India. So the Indian peasantry had a choice between selling an asset that was up 400% in their local currency terms or letting their children starve. All this silver appeared out of India and crushed the market, all that supply. Mm-hmm. The same thing is true in demand. Sometimes in the silver market, we're absolutely flabbergasted by where demand is coming from. We don't understand it. It turns out that very frequently corresponds with good harvests in India, Bangladesh, Pakistan, and Sri Lanka. Mm. People who are hoarding precious metals because they don't trust their government are unlikely to make a full reporting of their inventory. And so we have very poor data. I'm proud of these people for that. We have very poor data with regards to the total inventory, physical inventory in South Asia, and the intention of 200 or 250 million buyers and sellers. So I think on the demand side, when you leave India aside, which is tough to do, the picture is very, very bright for silver.
Well, you just raised this unknown of India, and sure enough, in September and October, India, after being out of the market for almost a year and a half, almost no imports, all of a sudden in September and October skyrocketed again. So India's back.
Jim, pay attention to the fact that these are official imports. Uh-huh. You'll notice that the publication that this came from was from Gujarat. The Gujaratis are the most famous traders in India.
Oh, so they're lying.
We might describe them as smugglers. I actually have Gujarati family friends in Dubai who are, they would describe themselves as informal import agents. And when the Indian government put a 15% excise on physical gold imports to India. I asked the family who are gold traders what they thought about that. And they said, this is wonderful. It costs us 2.5% in bribes to introduce precious metals into India. And they built in 12.5% more profit margin for us. It seems that little boats go from Dubai out into the Indian Ocean fishing. And other little boats go from Gujarat into the Indian Ocean fishing. And accidentally they meet each other. And more than fish trade hands. And so when you are looking at the import of precious metals into India, understand that the government statistics are even more fictitious than our own.
Gotcha. Good to know. This is why we bring you on for this, this critical analysis that you just can't get anywhere else. With China and Evergrande, and it blowing up the real estate development market in China. I've seen several. Who was it we just talked with, Ivan? Was it Dan Oliver? Dan Oliver of Mermican Capital. And he was making the point, if China's real estate market's blown up and they're one of the biggest consumers of base metals for all those, all the infrastructure they're building, well, if that starts affecting the base metal production, then guess what? Silver production might decline also, or at least not. Some of the big mines that might be being planned that have silver byproduct might get delayed. I mean, this has impacts on the silver supply chain, correct?
Yeah, you mentioned a lot in that statement. So let's sort of unpack
process it all immediately and give me a 30-second answer.
Let's unpack it
okay.
Sequentially if we can. I don't think Evergrande by itself is a big issue. There's about $300 billion in liabilities. Let's assume that the equity's gone. Let's assume that there's a 65% recovery. A $200 billion loss in an economy with $2 trillion in foreign reserves. Not horrendous. The way it works out, I think, will be political, which is to say, I think that politically favored creditors will be taken care of and others will be less taken care of. So I think you're going to hear a lot of hue and cry around it. If you look at Evergrande, however, as being a descriptor, if you use it as a proxy for debt in China around property development and around the fact that capital flows are determined for 1.4 billion people by 10,000 people. If you look at it as a symptom for the misallocation of funds in China and the opaqueness of a capital market, there is certainly room to be concerned. I personally am a China bull. I'm not an economist, but I notice the success of the Chinese diaspora outside of China. If you take a people who are predisposed to education, that work like hell, that save like crazy and invest, it seems to me like they'll have a happy ending. 35 years ago, Deng Xiaoping said to become rich is glorious. And the consequence of that, the consequence of allowing the Chinese people a little bit more freedom, engendered in the biggest urbanization and the biggest increase of wealth, the biggest decrease in poverty that we've ever seen. My hope is that the Chinese state, looking for stability, will continue to allow their people to prosper. So I'm actually a China bull. Will the Chinese bull market continue unabated without perturbation? I don't think so, because the nature of the Chinese Communist Party is that they're more comfortable with absolute control. And a circumstance where 10,000 people control 1.4 billion people means that you don't have sufficient feedback mechanisms. You don't have an economy that functions as well as it otherwise would. So while I believe that the 15 and 20-year future for China is very bright, I'm much more concerned about the next 5 years as they sort of, work their way through the excesses of the last 10 years. And make no mistake, if we have a global economic decline, if you add a recession or a depression into the mix, irrespective of the origin of it, whether or not the culprit is the United States or China or something else, then the whole natural resource thesis, including the silver thesis, will be called into question. And your viewers need to take what they say, into account. it is very likely that byproduct silver production, particularly from copper in the next 5 years, fades. Because as a society, we have underinvested in copper exploration and development for 30 years. And almost no matter what we do, the next 5 years, we'll see lower copper production because we don't have the projects in the pipeline.
Gotcha.
You look at these big copper mines that produce byproduct silver. Chuquicamata, 110 years old. Teniente, 110 years old. Bingham Canyon, 120 years old. Grasberg, 40 years old. These things are, they're of my ilk, they're past their prime.
Are these scheduled for shutdown? Some of these big ones?
Not scheduled for shutdown, but you don't stand on a pit wall and throw in water and fertilizer and have these things grow more copper. Yeah. That's not the way it works. They are at max production or they're trending down. Yeah, absolutely. And it's between the need for increased social rents around the world. That's a fancy way of saying government royalty, taxation, and regulation. The new permitting regimes. It takes a long time to start a new silver mine, copper mine. It can take 15 or 20 years. We've known about the Resolution deposit in Arizona now for 12 years? It's a great deposit, billion tons of 1.5% copper. It's probably been another 10 years before it's permitted and built. Wow. So the ability that Resolution might have to address the shortage of copper in the next 5 years, when it'll take 10 years to get permitted, another 5 to finance it and build it after that, it's not going to make a difference for 15 years.
Well, Peru, I don't know if you saw the news in the past few days. The new Marxist president, Castillo, he ordered the shutdown of 4 mines, big mines in Peru.
Correct.
I don't know, were these lead, zinc, copper? You could probably tell me off the top of your head. But, the companies are now getting these environmental shutdown orders, and I don't know, is this like the country is, I don't know, playing a card trying to get higher royalty rates, or is this a real threat to supply?
I think it's some of both or some of all three, frankly. It's a threat to supply because it's unlikely that the country will or the companies will make sustaining capital investments or new project investments if they aren't sure who's going to own the project.
Yeah.
Certainly, partly, this is the new political regime in Peru playing to local constituencies. Whether or not they plan to follow through on this, it's extremely popular with municipalities that don't see themselves extracting fair rent. Remember, historically, social rents in Peru have gone to the capital, meaning Lima gets the silver and the regions get the shaft. And the idea that the center can blame the companies for the money that the center has stolen for 20 years is extremely convenient. Now, will the Peruvian politicians actually decide to steal defeat from the jaws of victory? Because remember that the formal sector in Chile, which is to say mining and oil and gas, is the biggest source of taxes paid in Peru. Whether they are stupid enough to snatch defeat from the jaws of victory still needs to be seen.
What's your attitude towards equities that have exposure to Peru? Avoid them right now, or hey, buy the dip because you think this is just they'll work it out.
I'm
without naming any names.
I'm not going to buy Hochschild's, which was formerly a top pick of mine, because so much of their revenue is affected. I think, with the exception of Texas, Wyoming, Nevada, and Alaska, that every state in the United States is basically a Peru in drag. People that look like the three of us tend to have a belief that political risk comes from non-Caucasian people who steal from us in some language other than English, and not according to the rule of law. The worst losses I've ever suffered personally from political risk came from the People's Republic of California. So I understand that I don't need to go to countries that I can't pronounce to experience political risk.
Are there any names right now that you really like that you're willing to share with the audience in the silver mining, silver exploration realm?
I continue to be attracted for people who can stomach non-transparent names. I continue to be attracted to Hochschild's. Probably the least challenging name I have is Pan American. They've missed 3 straight earnings, mostly because of COVID. They have been more positive in terms of their ability to deal with the disease than has probably been warranted. And so rather than exceeding forecasts, which they did for the preceding 5 years, they've missed forecasts for the last 3 quarters. And of course, they're exposed in Peru and Mexico. But I love the free cash generation around Pan American. I love the fact that it's no longer priced at a premium. You know, if I want to buy something, I like it cheap. What I really like there is they've got 500 million ounces in Argentina that aren't producing, that the market thinks will never produce. And they've got another 500 million ounces in Guatemala. They have 2 different high-grade deposits totaling $1 billion that might never produce, but they're on the balance sheet for free and they're worth more than nothing. And the company has been beavering away for years doing community relations in those jurisdictions. And if they got a restart permit in Guatemala or a start permit in Argentina, either of those 2 deposits, either one of them could double Pan American's production. So I have this huge upside warrant in the stock. And I'm not trying to say it's a probable event, but it's a possible event. But a possible event of really important dimension that I get for free.
Rick, while we've got you here, I'm just gonna let's do a little 1 or 2 minutes opinion on a couple of stocks.
Okay.
Dolly Varden, what do you know about it?
Dolly Varden is a stock that I think goes higher. I don't own it. It's a high-grade deposit with improving infrastructure, good people. I don't own it because I want deposits to have, you know, sort of minimum in situ reserves and resources, recoverable reserves and resources in the $7 billion to $10 billion range. And so Dolly Varden is too small for me. But in a silver bull market, this is almost certainly a stock that will work.
Next one that I wanted to mention, Silver Corp Metals, based in, you know, most of their deposits are in China.
Silver Corp, I don't own. I was partially responsible for taking it public. I know the deposits well. I know the management team well. There is a certain opacity to China, which scares me. But I wouldn't discourage people, particularly people who have a better feeling for the way business is conducted in the People's Republic, to look at this as a legitimate name.
Yeah, that one's very, you know, compared to, it always trades at a discount. That's what Garrett Goggin told us about it. It's always traded at a discount compared to other similarly sized silver producers, right?
An absolute top-rate CEO. They generate a lot of free cash flow, and they're polite enough to return that free cash flow to the owners by way of dividends, which I like.
Yeah.
Reyna Silver, Mexico, Jorge.
Reyna Silver is one of that whole class of exploration juniors that lately I've been avoiding like the plague because they were hopelessly overpriced. In the case of Reyna Silver, it would appear that they're enjoying exploration success in 2 different districts. I love the fact, too, that they have the ability to call on both Peter McGaugh and Doug Kerwin, 2 absolutely world-class geos. So that's one of the few of what I laughingly call penny dreadfuls that I own from my own account.
Reyna Silver. I'm sure Jorge will be, the CEO, will be very happy to hear that. Vizsla Silver, Michael Conert.
Vizsla is another one, another of the so-called penny dreadfuls that I own. I believe the larger companies exhibit better relative value to the smaller companies. And I play the smaller companies for torque, usually in private placements where I can get a warrant. In the case of Vizsla Silver, the drill bit is being very kind to them. And I remember my last incarnation, successful incarnations in the juniors, which was Silvercrest, which started off in the same fashion. It seemed expensive, but the drill holes were becoming predictive.
Gotcha. Well, hey, Rick, I want to thank you for, you know, you've given us 50 minutes of your time.
Yeah.
We really appreciate it. The audience loves to hear from you, and look forward to talking to you again next month or 2.
Jim, it's important that your audience needs to understand that the real Silversqueeze could unfold over 2 years or 3 years. It's likely not going to unfold over a long weekend.
Yeah.
And mark my words, if they shift themselves out of a good position because they regard, because they need psychological verification.
Mhm.
And then you see a circumstance in the silver equities that resembles the circumstance that we just saw in the uranium equities. They're going to kick themselves for the rest of their life.
Yeah.
It is so much more likely than not over the next 2 or 3 year market that we have a real silver squeeze, that people who transfer themselves out of these stocks are literally snatching defeat from the jaws of victory.
Yeah.
As you know, I like talking to your audience, but I think this discussion is particularly topical right now. Those members of your audience who care what I have to say are always invited to contact me directly.
Mhm.
Go to ruleinvestmentmedia.com. Enter your natural resource stock portfolio, including your silver stocks. I'll rank them 1 to 10, however harshly, 1 being best, 10 being worst. Please, by the way, be patient. I'm 900 rankings behind. If you mention charts, I will include 2 charts, as I always do. One, the Barron's Gold Mining Index, which is the most inclusive precious metals equity index in the world, going back 60 years. Wonderful way to look at the anatomy of a bull market. The second is a 100-year commodity chart, which looks at how cheap various classes of commodities are relative to other asset classes going back 100 years.
Mhm.
And if somebody further says silver chart, if Sprott will let me do it because it's their chart, I will include a chart which will demonstrate the outperformance of silver equities relative to gold equities in the second half of precious metals bull markets. The thesis that we talked about earlier in this program can be demonstrated in a chart. So if you include in the question thing, silver chart, I will include that chart as well. By the way, I'm no technical analyst. I'm not using these to point out, double tops or rounded bottoms or all that girl stuff. This is just as visual aids to make my case.
Nice.
Understood. And I will include the link in the description to where people can submit their portfolios to you for review. We appreciate it.
I look forward to it. Interview was fun. Let's do it again.
We will. I guarantee you we will.
Great.